your credit score really will be the number one factor when it comes to your interest rate. So your credit score will determine your interest rate, okay? But it doesn't mean that you cannot buy a house without having a great credit score. So the average credit rating is 680. Okay. Really good credit, I say, would start at 700, 740s. That's when you're going to get into the best interest rates.
So if I'm 680 and they have an advertised credit interest rate of 6.125, I'm not getting 6.125 at 680.
No, you might get like 6.5, 6.625. It really depends. I mean, your down payment will also impact your interest rate. Mm-hmm. So there's other things too. Yeah,
but just in general, I'm not going to get that best rate.
No, you're not. I have
20% down, but I'm 680. I'm not going to get that 6.125.
Probably not.
All right.
When you look at advertised rates, it's really, it's like best case scenario. So when you're looking at rates online and things like that, you shouldn't go by that because you really need to figure out what your situation is. And we tailor everything to the client's situation. So what is their credit score? What do they have for down payment? All of this stuff.
Okay. So I see 6.125 online or I see it on a TV. I need to still talk to you first. I can't just assume I'm 6.125.
Absolutely.
Okay.
Yeah. And you'd be surprised. Some people don't even know what their credit score is. So if I was a buyer, I would take a look at that just to see where I'm at. And I know a lot of people are pretty conscious about that because it is, something that we're talking about a lot. Another thing that your credit score could impact is actually your ability to access loan products. So let me give you an example. I know in our other video, we talked about 3% down programs.
Right.
That might not be available if your credit score is like 620 because we're looking at risk. So now we have the risk of 3% down, and then we have now the risk of the 620 credit score.
Right.
So the lender might not want to give you a loan with that. So they might say, listen, Sean, because of your credit score, we need 5% down. Do you have that? And so you don't. Now you're no longer eligible. So keeping a healthy credit score will help you a lot when it comes to home buying.
All right. So what can I do to keep that credit score? Or what can I do to, I don't want to say fix it because I know that's a bigger problem, but let's say I want to keep my credit score healthy.
The most important thing when it comes to credit and something that you can control, it's on-time payments. So you want to pay everything on time. Your car loan, your personal loan, your credit cards. You don't want to be more than 30 days late. When you're 30 days late, the creditors report to the credit bureaus. And one interesting and scary fact, anything that is derogatory on a credit report stays on there for 7 years, my friends. 7 years, that one little late payment will affect you. So the best thing you can do is set everything up to auto pay, at least the minimum. And then okay, it's covered, I don't have to worry about it. Another thing you can do, if you're young, get started on your credit early on. So open up a little credit card when you're 18, 20, or as soon as you can, say you're a newcomer to the US. Because your credit history means, it shows a lot. Basically, your history determines your future. So if you can show that you can make on-time payments, well, the lender's going to say, great, you're already making payments, we trust you, we're going to give you a loan.
So do I just have to have the credit card, or do I have to use the credit card and show that I've made payments on the credit card?
You want to try to use it. So even if it's like your Netflix, you can put your Netflix on it, put it to auto pay, forget about it, and you're growing your credit without even buying something that you would normally buy anyway.
Yeah, because I remember I got my first credit card. I very quickly got into debt on my first credit card, so I don't recommend 18, 19, 20-year-olds getting credit cards, but it sounds like you want to get a credit card to get credit, so you need to be way more responsible than I was with your first credit card.
Yeah, exactly. You want to do it with education, right? So a lot of the times I'll speak to my clients' kids or family, friends, because, if my first credit card, I wouldn't go to TJ Maxx and get it. Love TJ Maxx, but I would go to my bank, right? So whether that's, a savings bank or a big bank, that's where you should get your first credit card. Because it's going to be in your online banking, which you're already using. So you're going to know what you owe, what you should be paying, and have some education. Ask the person selling you the credit card, or call a loan officer, talk to a financial advisor or somebody that you admire to teach you about these things so that you're not getting into trouble just because you don't know. And that's what tends to happen to young adults. Available credit plays a big part on your credit score. So what this means is, basically we want to see, or creditors want to see, that you have the ability to borrow, but that you have the discipline not to. So what that means is, let's say you have a $5,000 limit on your credit card, and you owe $4,900. That shows no discipline, no control. You've gone over the rails.
Right.
And that's going to impact your credit negatively. Now, on the contrary, say that you only owe $100 on that credit card, or you use it and pay it in full every month. Well, that's going to show creditors that, hey, Sean is responsible. He could have this debt, but he doesn't. And that will impact your score tremendously in a very positive way.
Do you know if it's better for me to pay it off in full every month or to carry a small balance? Do they have one preference or the other?
Don't carry a balance, my friends. You're going to pay interest on something you don't need to pay interest on.
Never pay interest.
No, yes.
Except
I mean,
your
unless
lender.
you have to. Unless you have to. Obviously, there are emergencies, but if you can pay in full every month, well, that's what you should do. And I know a lot of people say, like, carry a balance, that's complete. No.
Okay.
No, you don't need to do that. You just need to pay on time. And that's it.
All right. Jen, thank you very much again.
Thanks, Sean.
All right.
Thanks
Thanks
everyone.
everybody. Have a great
See you
day.
soon. Bye.